By the end of this video, you will learn what is a disability tax credit, how the government defines disability for this program, how much income tax you can save once you are approved for disability tax credit, what are the steps to apply for this application, and what other benefits you get once your application is approved. So to understand the disability tax credit, first we have to understand what exactly is a non-refundable tax credit. A non-refundable tax credit reduces your income tax that you owe to CRA. So for example, let's say somebody owes CRA $5,000 of income tax and they have $2,000 worth of tax credit. So if it's a non-refundable tax credit, they can apply that $2,000 against the $5,000 income tax they have to pay to the government. Once they apply the tax credit, it's only $3,000 that they have to send to the government. Disability tax credit is a kind of non-refundable tax credit, so it will reduce your income tax that you owe to the CRA. It also opens up a lot of different accounts such as Registered Disability Savings Program, RDSP, Canada Disability Benefit, Canada Child Disability Benefit. Once you log into your CRA account, you will see a confirmation on your CRA portal that tells you when the disability tax credit was approved, the starting years, and how long the disability tax credit is eligible. And that will tell you that up until this point, the CRA will automatically apply the disability tax credit once you use a proper software. Sometimes these disability tax credit expires. For example, in this example, as you can see, this disability tax credit approval will expire in 2029. The person with the disability has to requalify for the disability once again in 2030. So some of the disability is lifelong. So for example, if somebody is amputated and they don't have any body part, some of those disability is lifelong and some of them are not. So if there is a lifelong disability, then that will have a permanent year, and if the disability is temporary, there will be an expiry date for the disability tax credit. In that case, the application has to be done again and the doctor has to confirm that the disability still applies. A CRA will attach a new date for that disability tax credit certificate. Now let's take a look at how the government defines the disability for this program. So basically the way the government defines is they have to be marketed restriction. So what that mean is, let's say somebody has a disability, person's age is 40 years old. The government will look at the speed of some of the activities that this person is taking and whether this takes 3 times longer than other 40-year-old people. For example, if this person is a male 40, and then the government will look at how long does this person take for certain specific activities, and if that duration for that activity is 3 times more than other 40-year male, then it qualifies for the marketed restriction. This disability has to stay for at least 1 year or 12 months. So as you can see, it has to be a long-term disability and 3 times longer than the same age group and same gender. Now, these are those definitions. So if you are watching this on YouTube or any other video format, then pause the video and take a look at what are those activities. You can see from the left column, there is walking, dressing, feeding, using washroom, hearing, speaking, and vision. These are the 7 activities that CRA looks at when they are reviewing an application based on physical disability. You can see on the right side, there are some list of common symptoms that can be applicable for certain types of activities. The middle column explains what would be the level of disability that somebody needs to have to qualify for the definition for this program. Now, there are some life-sustaining therapy that a lot of people take, and in those cases, there is a slightly different ways the government is looking at the application. So the definition for this type of disability is how much time that disabled person is spending for that particular dialysis or therapy. For example, if somebody is diabetic and they are spending more than 14 hours a week to tackle that disability and need to do insulin therapy twice a week, then it qualifies for the definition of the disability. Now, type 1 diabetic is automatically approved because the government simplified this back in 2001. The government simplified this a few years ago, but type 2 diabetics, there is the test of spending 14 hours a week or 2 times therapies a week. So if somebody has that threshold, then they can also qualify for the disability tax credit. Now, the last type of disability is the cognitive disability or mental functions. So basically, in that category, there are different activities that can be challenged because of this disability, and CRA listed all those different activities. So, for example, if somebody is having problem concentrating because of their disability, and the common symptom can be ADHD or anxiety, those are also qualified if they meet the definition. For example, if they have a problem focusing on task, recalling short-term information, all those things can also qualify for the disability tax credit. And you can see from the list that there are different ways that the medical professional can test you, and if that meets a certain threshold, then this can qualify you for disability tax credit. Oftentimes, we see that the last category of disability, mental functioning, is the one that gets rejected by the a lot because it's harder to quantify and it's difficult for the medical professional to write. So most application that are declined by CRA is under the mental function category. Now, how much tax dollar can you save once you have disability tax credit approved? On average, you can actually reduce your tax dollar is roughly around $1,500 to $2,000, and it depends on how much is your income tax bracket. The way CRA calculates this benefit is they give you a base amount every year. This is the base amount for the year 2025. You take that amount, apply the lowest tax credit for the federal government and the provincial government, and that's the actual tax dollar you qualify to reduce your income tax. I'll go through an example in the next slide. And if you are applying for a children, then the children also get an extra few $1,000 because of the supplement. If the person with disability is a minor child, then they get the base amount plus the child supplement amount, and then the combined total is the amount that the CRA will use to calculate the disability tax credit. Let's take a look at how this disability tax credit amount is calculated. This is the base amount, and the supplement amount if the person with the disability is the minor person. This chart is showing you on the federal side, and as you can see, the lowest tax bracket for the federal income tax is around 15%. Recently, the government reduced by a few percentage point, but I'll use 15% because that's the roundup number. So as you can see, the total amount of actual tax dollar is around $1,500. If somebody is owing the government $4,000 and they have $1,500 tax credit, then they only have to send $2,500 to CRA once the tax credit is applied. If the disabled person is a minor child, this supplement will also give a little bit of boost. In total, 2,400 can be gained because of this tax credit. Now, minor child, and most of the time don't have any income, you can actually transfer it to other family members. Most often parents who are supporting the minor child with food, shelter, and other stuff, they can take that tax credit and apply against their income tax. If the minor child has other types of income, they can also apply against their income tax. As you can see, these are the other years of tax credit. I listed all the way for the last 10 years, and you can see how much tax dollar you can save once you have the disability tax credit. When somebody gets approved for the disability tax credit, the disability tax certificate has a issue year. So, for example, in our first slide, we saw that the person is approved since 2018. When you get approved from this, will automatically reassess your previous tax return and apply the tax credit for that year. Oftentimes, if somebody has multiple years of tax return reassessment, they get a large income tax refund because they have these savings against their tax return. Now, what happens to the provincial side? Provinces also have provincial tax credit, but the amount is different from different provinces. These are generally the base amount for different provinces. For the year 2025, the provinces will apply the lowest tax rate for that base amount. And as you can see, the right side column is the actual tax dollar amount that you get as a credit that you can claim against your income tax. So in Ontario, the lowest tax bracket is 5%. If somebody is disabled, then the $10,000 will give roughly around $5,000 of tax credit that they can use against their provincial income tax. Now, the other benefits that I talked about is once you get approved for disability tax credit, it opens up some other benefits. The first one is the registered disability savings plan, which is RDSP. This is a wonderful account and it has a lot of generous benefits, and the government gives lots of money as grants and bonds, and you can invest that money long term for your retirement. I made a separate video on RDSP, so I recommend you checking that video out to learn more about the RDSP account. If the disabled person is a minor child, then what happens is you automatically get approved for child disability benefit. Now, child disability benefit program is actually administered by the Department of Canada Child Benefit. They have all the information already. Once the person gets approval for the disability tax credit, that department automatically reassess your tax return and start sending you the child disability benefit along with the Canada Child Benefit. You don't have to apply separately for this benefit. Once you get approved, they start to send you the CDB benefit. Now, recently government also introduced a different program, and it's also called CDB, Canada Disability Benefit, and this applies to certain family which has income under a certain level. So I made a different video on this topic alone. You can watch this Canada Disability Benefit video and you can learn what are those income threshold that will qualify you for this CDB benefit. Also, different provinces have certain programs. For example, in Ontario, we have ODSP, Ontario Disability Support Program. So each provinces have their own program, and once you have disability, you may want to check out whether you qualify for the provincial programs too. And lastly, certain tax credit requires you to have a disability tax credit approved. For example, home accessibility tax credit is one of those tax credit that can reduce your income tax if you upgrade your home to make it more accessible. The amount that you spend on those renovation, you can get some home accessibility tax credit for those. And to qualify for those home accessibility tax credit, you have to have the disability tax credit approved. Now let's take a look at the actual application form for the disability tax credit. Now the actual form number is T2201, and this has a two part. So part A is where you are going to input your information. Question number 1 tells the CRA who is the person with the disability and their date of birth, their address, and the social security number so that CRA can identify who the person is. The second question asks you about who is going to claim the tax credit. Part B is where your medical professional will explain what kind of disability somebody has in writing. So part B is the one that the medical professional fills out. And when CRA reviews, basically CRA is looking for a specific wording to determine whether they meet the definition for that particular disability. Remember, we talked about the 3 times duration. So the doctors really need to specify clearly, which will help the CRA agent to figure out whether this disability is creating some sort of restriction for that individual. Part A is asking who will be the person that will claim the disability tax. Now, as I said, for minor children, the parents can ask for it. The definition is if somebody is providing some sort of support financially, shelter wise, then this person can apply for the disability tax credit. The purpose of the disability tax credit is to reduce some of the financial burden for the family with disability. If one person in the family is supporting the disabled person, then that person can benefit a little bit with reducing their tax amount. Anybody under this criteria can apply for the disability tax credit amount. It can be parents, grandparents, child, brother, sister, uncle, nephew. So anybody who is supporting them financially, shelter-wise, they can ask for these disability tax credit. So you have to give the information to CRA. CRA can attach the information on the tax return. This is the person asking for the disability tax credits. And CRA will ask a little bit of question like how long they have been supporting this person and what kind of financial support or other support this person is giving to the disabled person. The third question on part A is basically asking whether you want to automatically reassess your previous tax return. Oftentimes, these disability tax credits are approved from, let's say, 5 years before the application. For example, if you are applying in 2025 or 2026, the disability tax credit may be issued from, let's say, 2021 when the disability actually started. If you select yes to this question, then CRA will automatically reassess your previous tax return and give the person that is listed question 2, they will reassess all the previous year's tax returns and automatically refund you whatever you qualify for. This is a very handy option. You do not have to go to a CPA or your tax preparer to get this done, but make sure that whoever is listed on question number 2 has enough income tax payable to maximize the tax credit amount. For example, if the person who is claiming the tax credit doesn't pay any taxes, there is no point of assigning that person question number 2 because they're not going to get any benefit from this disability tax credit. You should always assign the person who has the highest tax payable, meaning that they are paying the highest tax to CRA, because that's when you maximize the tax credit. If you are parents and you are supporting a disabled minor child, the parents with the higher income tax should apply for the disability tax credit on their tax return. Now, sometimes the person may not have enough tax payable. In that case, you may have to apply a certain amount to the higher income parents and transfer the rest of the amount to the other spouse or other parents to make sure that all the tax credits are claimed. In that case, you have to manually adjust and maybe you need to have help from a professional. If one parent's enough tax payable, then this is the simplest way and you do not have to go to a CPA or tax preparer for that partial tax credit transfer, but make sure to always choose the person with the higher income tax. This is the steps for the application. Once you figure out that you might qualify for the disability tax credit, first of all, get the T2201 form from CRA and fill out part 1. Then take your application to your medical professional and they will fill out part B. Once you have the medical professional sign and supporting comments, you can submit it to CRA. Now you can send it by mail or upload it on your CRA tax portal. CRA also streamlined this application program. Right now, there is also a third option where you can start filling out this form from your CRA portal and then the doctor will get an email from CRA to fill out Part B. Now, it's a new system, and CRA actually has a video on this process. Check out this video to learn more about how that thing works. But most people, what they typically do is they fill out Part A and then take the physical paper copy to the medical practitioner and they fill out the Part B. Now, once you submit the application to CRA, there is usually a 8 weeks wait time. Now, depending on how busy CRA is, this application can be longer than that timeline. And then they will give you a notice to confirm whether the application is approved or denied. If they approve your application, it will show up on your tax portal and tell you when it was issued, the day, the year where it was issued, and if there is an expiry date, they will also tell you when the disability tax credit will expire. If you are rejected, you can submit another application after 90 days. And obviously, when you are reapplying, make sure that you are adding more supporting information to your application so CRA can determine the nature of the disability better. One thing I would tell from my experience is the persons who are reviewing this application, they are not medical professionals. They cannot determine whether you have disability or not. Basically, they're looking for specific words or specific comments from the medical practitioner that will help them to determine whether your disability is limiting your activity. If the application or the comments from medical professionals are not adequate, then even if you have the worst type of disability, it may get rejected. So it's really important how the medical professional is writing those notes, because these notes will dictate whether you have disability or not. So sometimes the CRA also is confused, so they may, or maybe they cannot determine whether the disability is enough, so they can reach out to the medical professional for further information and supporting documentation. In that case, the process of this application can be a little bit longer. The obvious question is, who can certify or fill out the Part B of this DTC application? So, medical professionals such as your family physician can attest or write notes for all kind of impairment. So they are qualified to write your physical disability or your mental functioning or some sort of therapy. Same goes with nurse practitioners, and some other medical professional can only attest certain type of activities. For example, psychologist can only assess your mental functioning. Those questions that CRA is going to look at and assess your disability, psychologists can only write the Part B for mental functioning. They cannot certify or assess a disability, which is, let's say, hearing, right? So you have to go to an audiologist for hearing problem. So talk to your family physician. The problem is a lot of family physicians don't help with the disability tax credit application, but I will explain in the later slide how to get around in those kind of situation. But as I said, the most common reason for this application rejection is the lack of specific detail. So CRA is looking for certain word, and your medical professional has to be has to, like, they have to be able to write the way CRA is asking. Now, unfortunately, very few medical professionals are trained in this application process, and a lot of time they don't know how CRA is expecting the wording. When you are talking to your medical professional, make sure to tell them what specific things restricting your ability to work. So I want to give you a heads up, because a lot of doctors charges anywhere from $200 to complete these forms, and that's completely normal. And if there is a complex case, this fees might be a little bit higher. So make sure to be prepared that your medical professional might ask you for a few $100s to apply for this application. Now, if you're applying for this disability tax credit and you're paying for this service, then you can actually use that as a medical expense for that year. And if you spend some certain dollars, then you can get some tax credit for medical expense. I want to warn you against some promoter companies. So you may find few companies that are going to help you to fill out the Part A form and not charge any fees, but they will take a percentage of the refund once the reassessments are done. These are called promoter companies, and before there was a law that was approved a few years ago, these promoter companies were charging $3,000, $4,000 as tax refund because that's usually what people get. So imagine you have 5 or 6 years of tax refund, and each year you are getting $1,000. So you can easily qualify for a few $1,000. In this example, 6 years of tax refund can easily go over $6,000 to $10,000. These promoter companies are charging 20 to 40% of that refund. You are looking at a fees of 2 to 4,000 as fees for filling out Part A. This is extremely high fees, and that's why the government made it illegal. The maximum somebody can charge for this kind of service is $100 per tax year. If the case is a little bit complicated, like if there is a partial tax credit, you can expect a little bit more, but you shouldn't pay more than few $100s for this service. Absolutely no percentage of refund. Be aware of these promoter companies. I want to thank Dr. Wayne McLeod. I do not have any affiliation with Benefits 2 and his company, but I see that he is one of the most knowledgeable medical doctor in Canada about disability tax credit, and he has started a service where he can actually review medical documents and apply on behalf of you if you give him permission and pay a nominal fee. This will help those people who do not have a family physician, who is not supportive enough, or doesn't have a family physician at all. So in that case, if you submit your medical documents to Benefits 2, they can apply on behalf of you. Again, I do not have any affiliation with them, but I want to give them credit where credit is due. The DTC timeline is around 8 to 16 weeks, and once you are approved, they will send you a letter. If you find the application status on your CRA portal, you can also see the estimated time. There are few Facebook groups that are very helpful. Benefits 2 has a Facebook group too. There are some other Facebook groups which are extremely helpful. You can also post your questions there and get a sense of what's happening with other Canadians who are in the same shoes. Once you apply, you can call CRA number 800 number 959-8281 and tell them your number. They can give you some updates on your application. You can check out the status on your CRA online portal. Now, if there is a change in the application, you can call them or send them new information. Now, what happens to newcomers who are not a citizen or permanent resident? Disability tax credit has nothing to do with your immigration status. Disability tax credit is based on tax residency. So if you are an international student or a work permit holder or a temporary resident, as long as you are a tax resident in Canada, you can apply for this disability tax credit. If you leave the country and become a non-resident, and this applies for citizens and permanent residents too, and if you become a non-resident of Canada, then this disability tax cannot be applied. So anytime there is an improvement or change in your physical condition, you should let CRA know so they can update the file. Sometimes the disability can get worse. In that case, if you previously got rejected for an application, then you can submit a new application with up-to-date information. If you have a family member who has disability and you are helping them financially or giving them food or shelter, then you can claim the disability tax on your tax return. In that case, there is a line item 31,800 where the disability tax credit transfer happens. Make sure to fully claim the disability tax credit so you can lower your tax amount. And finally, once you are approved for disability tax credit, reassess your previous tax return so that you can get a refund. Also, if you are less than 49 years of age, make sure to apply for the RDSP plan. This is a very generous plan. You can get hundreds and thousands of dollars grants and bonds from the government. If you are under a certain income threshold, check out the Canada Disability Benefit Program because you have to apply manually for that application. And if you are upgrading or renovating your home, talk to your CPA or tax professional to apply for the home accessibility tax credit. Thank you so much for watching these videos. If you like this video, make sure to subscribe to our channel and share this video with friends and family who might benefit. If you have a question, please put that in the comment section so that topic in the future. See you in the next video.